Good evening, everyone. I am CA Vatsal Gupta, moderator of this webinar. We are delighted to welcome you all in the webinar being organized by Continuing Professional Education Committee of ICAI. It is my pleasure to be the moderator for the webinar on recent developments in MSME and trust registration. In a short while, we will start this webinar, but first, I would like to apprise you all about CPE Committee. The profession of chartered accountancy is growing leaps and bounds, and its phenomenal growth has brought the profession at the forefront. Today, our profession has acquired an indispensable position in the business and economy. ICAI continuously aims at developing knowledge edge so that the members stand out to the expectations of the society. To achieve this objective, the CPE Committee of ICAI has been continuously striving for perfection, integrity, and knowledge, which makes the word chartered accountant synonymous with excellence in service. In this direction, CPE Committee has always been proactive to the emerging needs of its members, enabling them to acquire contemporary knowledge and skills to face the challenges effectively by organizing CPE programs and providing adequate opportunities. The program for this evening is as follows. We have two sessions of 1 hour each, and the topics are first, recent developments in MSME and non-traditional areas of practice. And second topic is issues in trust registration under the Income Tax Act. Our eminent speaker will talk about above mentioned two emerging areas of professional interest. To continue, I would like to brief you all about our chairman sir of CPE committee of ICAI, that is CA Purushottam Khandelwal ji. CA Purushottam Khandelwal ji is chairman of CPE committee and also the convener of RBA Directorate of ICAI. He is having 25 years post-qualification experience in the field of audit, direct and indirect tax, and intellectual property rights. This year, he is devoted to fortifying CPE framework and guaranteeing quality across its entire operational spectrum, and his major focus would be on upgrading of CPE portal for the enhancement of the branding and professional competency of members. I request CA Purushottam Khandelwal ji to enlighten the audience with his kind words in his welcome address.
Good evening, respected faculty for the first technical session, Anirudh Tiwari ji. For second faculty, Chunoti Dolokia. She is from Gujarat, Kutch. Amitabh Bachchan rightly said, कच्छ नहीं देखा तो कुछ नहीं देखा. उस सिटी से चुनौती मैन आते हैं. गुजरात की छोटी सी सिटी है. वत्सल गुप्ता जी, moderator of this session from Aligarh. Secretary of the CP committee Ajitnath Ji Tiwari and technical team, respected member. It is immense pleasure to be amongst you on this Wednesday. My committee is dedicated to update the knowledge of members. We are organizing every Wednesday webinar from 4 to 6, where the renowned faculty across the India is addressing to the members at large and solve their queries. CP is a mother of all the committee. My committee organizing seminar, workshop, national conference, residential refresher course across the country. Last year, we have organized huge program across the country from Kashmir to Kanyakumari. The secretary of the CP committee, Ajitnath Ji, is dedicated and always available for all programming unit. Whenever they approach, he is always ready to help them. This year, ICAI is celebrating 75th year of inception, and our president, Ranjit Agrawal Ji, is doing a wonderful job. They are meeting to all the regulator, SEBI, RBI, C&AG, to establish a harmony between the regulators, because we are also a regulator. Last month, we invited Ajay Bhushan Sharma ji chairman of SUNAPRA, to the council members, to make a better coordination between two regulators. I'm always saying that audit is a serious business. Member has to take seriously. I have seen that whenever we organize program of direct tax or on indirect tax, the member are attending at large number. But whenever we organizing a seminar on the audit, accounting standard, audit standard, the number is very depressing. It shows the interest of member that not encouraging. But my humble request to the member, our profession is known as an auditor's profession. Auditor has to know each and every aspect of the accounting standard, auditing standard. Rightly said that we are taking care about the client. Whenever the income tax notice received by the client or a GST notice client, we feel always a trouble that my client should not face a consequences. But whenever it comes to our profession, we are not maintaining a proper documents. We have to face the music. So this year we are focusing on the auditing, accounting standards. Frequently mistake done by chartered accountant on attesting the financial statement. So we are doing our best efforts to make our members update. This year, Ranjit Agrawal ji had made one committee, AI in ICI. ICI is using technology in exam, in office management. We are coming with the audit tools which will help to the members for drafting of appeal in income tax, GST. If we will give a key information to the ChatGPT, the tools will prepare an appeal and drafts ready available to you. So your job will be easy. But I'm always says it cannot better than human intervention. So human intervention is always there. It make your job easy. The same way we are coming with the tools for student that will analyze the trend in the examinations, which question asked in which examination, what is the topic, where it is. So you have not to turn up a many page, but the click of mouse, you will get everything. Last year, I was the vice chairman of the committee for member in practice, where we had given a free of cost worth of rupees 20,000 to office management tool to every member. This time, the member has not downloaded the software. We can come with the tools, we come with the software, but ultimately it has to be used by the member. If the member will not use the tools, we will not get a targeted result. Today's both the faculties, Chunoti ji and Anirudh Tiwari ji, both are the expert. I will not take much time because you all are here to hear the Anirudh ji and Chunoti. So I will not make a short time. Wish you all the best for happy learning. Thank you so much.
Thank you, sir, for those kind words. Now, as I speak, the time is here to start the deliberation by our first learned speaker of the day, CA Anirudh Tiwari ji, in front of more than 550 members in audience. CA Anirudh Tiwari ji is having vast experience in the bank audit assignments, which include state audit, credit audit, revenue audit, stock and book debt audit, etc. He has also been advising so many SMEs and startups and also providing corporate training on internal control and indirect taxes. Moreover, he has also been a regular speaker on bank audits, specialized monitoring, MSME, startups, and GST for ICAI and other platforms. We are sure that his suggestions will help us in our practice areas. I now request C. Anirudh Tiwari sir to please start his deliberation for the day.
Thank you so much, Vatsal ji, for a very nice introduction. I'm thankful to our chairman, very energetic, dynamic, and I would say very proactive chairman, say Purushottam Khandelwal ji. And he has shared a lot of new things which he has given to all the members. And I'm thankful to him for arranging all the webinars, regular webinars for the members from all over India. And I can see, I can witness the level of energy he and Vice Chairman C. Gyanchand Mishra ji is putting on for the betterment of the profession. So congratulations to both of you, and we are really thankful to you, sir. So for today, we have two very important aspects to discuss. One is the MSME recent development, and another is the changes and issues in the trust registration, which my co-speaker, a very senior Madam Chunoti ji, will be taking session on that. So I'll start with the MSME. So we all heard what exactly the MSME is, how it is improving, how it is growing, how it is beneficial for the members, whether members can also register themselves as a MSME, whether they can get benefit of the 45 days delayed payment, whether they can get some OD facility or lower rate of interest facility from the bank. Everything we'll discuss. And I would say we all know all these things. So the first thing today I'm going to discuss is very recent development, and we all are struggling with that. That is Section 43BH, because it's a really very huge burden for the industry. And as a professional, when you talk about the chartered accountants who are practicing and who are going to sign the audit reports, so it's really a huge opportunity on our shoulder. We have to be very diligent at the time of audit. We cannot adopt the casual approach that yes, on 30th September, client is coming to us at 11 PM at night, and we are just reviewing the papers and signing the report. It will not work actually. Huge responsibilities are there. So you have to work very diligently. And in order to work in a diligent manner, you have to prepare all your working paper. So today we'll discuss what exactly the threshold of MSME, what is definition of MSME, how we are going to recognize or identify whether the supplier is belonging to the MSME sector or not, whether the amount payable to the supplier with whom we have purchases goods or services, whether the same will be allowed or disallowed at the time of preparation of a financial statement or preparation of financial or the preparation of the income tax return, mainly because the disallowances would be for the income tax, whether it will add burden to the income tax or not, whether it will add to my profit and it will increase the tax amount or not. So this we are going to discuss. But before that, we cannot ignore the MSME sector contribution, because it's the only sector after the agriculture which is generating the employment opportunity. And it's very essential for the growth of Indian economy. We all have seen that where the world is going. But we can also witness and we can also see that where India is going. Both are into different segment. We have seen the downfall in the world, but we have not seen that downfall and that pace of downfall in the India. We have every time we have witnessed the growth opportunities just because a small sector, micro, small and medium sectors are growing. After changing in the definition of MSME use, I would say around more than 90% business entities are now covered in the MSME sector, whether it can be the medium enterprises or small or micro enterprises. So for that front, we have to understand the definition. So the micro, small and medium enterprises segment contribute around 45% to the manufacturing output of our country and around more than 40% to the export of our country. And if you talk about the GDP, so around 29% is the contribution of MSME to this India's GDP. We always talk about the MSME, but we have never thought that this is the gray area. This is something where we can make money as a professional, we can make a career in the sector. Because we have always seen the cost center. We have always been the cost center for the MSME sector. But my friends, we have to understand time has been changed a lot. If still you work like a compliance person or compliance partner, then very soon the artificial intelligence will definitely replace you. So you have to add some value. And the actual MSME and startup looking for some value addition from the experienced professional as we are. Because nobody can be expert as we are in the numbers, in the finance. So we can suggest how to grow the business. We can suggest how to reduce the cost, how to optimize the cost of MSME. We can suggest what are the better borrowing opportunity, better debt opportunity in comparison to the existing one. We can suggest how the rate of interest can be reduced from the existing one. We can suggest what are the other opportunity or segment where revenue leakage are there. So you have to grasp that area through which you can add some value to the MSME sector. And the moment you will add value to the MSME sector, they will definitely pay you more than you actually expect from them. So use other benefits like there is exemption of 1 or 2% in the interest rate, some waiver of around 50% of subsidy in the patent registration. You will also see that a lot of credit schemes are there where you can, your MSME client can get credit or loan without giving any collateral security. Collateral security has been very instrumental because without any security, it's really very hard to get the loan. But if you are the MSME and you have the valid Udyam registration certificate, then you can get up to 5 crore of loan without any collateral security. Then government is there to reimburse the ISO certification charges in the MSME sector. If you talk about OD, OP or other zero certification, so you will find that lot of MSME sectors are working, but quality are not as much as expected from them because they don't have very good infrastructure, they don't have the good technology, or they don't have very good support system through which they can work and give good output and quality output. So for that front, we have to advise them with the schemes of Government of India, central government or state government, where technology and quality upgradation support has been provided by the MSME ministry. Market assistance has been provided where the MSME can showcase their services and product to all over India and even globally as well. A lot of other compliances benefit has been provided to the MSME sector. But we have to understand what MSME is, how it works, whether my client actually belongs to MSME or not. To understand the definition, we have to understand the threshold of MSME definition, which has been amended at the time of COVID pandemic. So anybody tell me what exactly the definition is for micro or small or medium? Can anybody tell me? Yes, please put it on the chat box. Meanwhile, I will tell you. So earlier there was two different segment. One was the manufacturing and another was the service sector. So different threshold was there for manufacturing segment and different threshold was there for the service segment. But after this change in the pandemic era, both the sectors have been clubbed together and the threshold is now for both. Either you belong to manufacturing or the service, but threshold is same. But earlier only investment criteria was there. But now one more criteria has been added, that is called the turnover criteria. So for the macro category, we have to see whether my investment is up to 1 crore and turnover is up to 5 crore. So if my turnover is up to 5 crore, not more than 5 crore, only up to 5 crore, and investment is up to 1 crore, and I'm fulfilling both the criteria. See, the word is and, not or. So since and is there, so we have criteria, not any one. So if we are complying both the criteria, then we can classify ourselves as the micro enterprise. Now, if I have turnover of more than 5 crore, but less than 50 crore, likewise, I have investment of more than 1 crore, but less than 10 crore. So now we will fall under the category of small enterprises. So for the small enterprises, we have criteria of investment up to 10 CR and turnover up to 50 CR. Now, coming on the third one, what exactly third one is? The medium enterprises, the very bigger one, large corporate we used to say. So in the medium category, the testing of investment would be up to 50 crore and the turnover would be up to 250 crore. So if your client or any entity having Udyam registration certificate complying these criteria, then they will definitely fall in the category of medium enterprises. So you have to see if any of the criteria is not fulfilling, then your status will be upgraded. And let's say if I have turnover of, let's say, 4 crore, but investment is 2 crore, then I cannot classify myself as a micro, but I will be the small enterprises. So this you have to make a good understanding about the definition, because when you will go for the audit, your client's audit, then it should be in your mind that how to categorize, how to see whether my client belongs to MSME or not. Now question comes in, sir, when to see this criteria, or if I have any investment in the second hand machinery which I have purchased from somewhere, so will that also count in the investment? Obviously yes. So this hardly matters whether the investment in the plant and machinery is for the first class or second hand. It hardly matters. If you have invested in the plant and machinery, whether you have purchased first hand or second hand, both will be counted. And the turnover, when you talk about the turnover, so if I have 5 different units and all the units have different turnover, but all units are under the same PAN number of the proprietor or the company. So for the calculation of turnover, all the units turnover will be clubbed together, and then you will see whether the turnover criteria is being fulfilled or not. If after combining all the units turnover and plant and machinery, if still you are fulfilling the criteria, then you can classify yourself as what? Micro, small or medium enterprises. Then two points are very important with respect to the classification. One is, what about the investment in the plant and machinery which have been made in the research and development? What about that? So, or I have made some investment to control the level of pollution. So if any entity have made some investment in the cost of pollution control or in the research and development or industrial safety devices, then that investment will be excluded at the time of calculation of the quantum of investment. So these three things will be excluded for the purpose of calculation of investment. Now coming on the turnover, is there anything which will be excluded for the calculation of turnover? Obviously, yes. So in case you have any export of goods or services, so here government want to encourage you to grow more, to earn more forex. So that is why if you have any export of goods or services, so that part of export will be excluded from the total turnover, which is being calculated for the purpose of calculation of threshold for this MSME. So that you have to keep in mind, that whether your entity is actually fulfilling all these criterias or not. Now, another point, sir, is there any document I need to upload in the portal in order to get the registration? Sir, this is the only one portal or statutory portal, you can say, where you don't need to upload even a single document. Government is completely relying upon you. Whatever you will declare, they will accept for the first year. But for the second year, they have linked your PAN with the income tax portal and GST portal. So whatever turnover and investment in PPE you will declare in the ITR, so that data will automatically be shared with the MSME department, and they will see whether your declaration is correct or not, because every year they will check and they will update your Udyam registration certificate. Because if you are not falling within the criteria of micro or small or medium in the coming years, then your status will be changed. You cannot get benefit for the lifetime, that if I have taken the registration now, so it's for lifetime. It's not the situation. Every year it will be changed based on your actual financial position. Now, second point. Sir, usually I get query over call and mails. People used to say, and our members used to say, sir, traders are actually MSME. I say, yes, obviously traders are MSME. So whether all the provisions are there for the traders as well or not? Sir, earlier there was two entries, entry number 45, 46, and one additional was the 47. So these three entries was not there. That was for wholesale and retail trade. So earlier traders were not allowed to take the registration under MSME. But when Gadkari ji was the minister of MSME, so he has changed and he has included these traders in the list of MSME, and they said that yes, they are also the partners in nation building and they must be the MSME. But sir, there is no process, no any employment generation, considerable employment generation. Then why to categorize the MSME? Why to give the benefit? So there is huge working capital required in the trading business as well, and that trader used to take that working capital loans at a very higher cost, even from the NBFC or some of the private bank or PSU banks. So that time the classification got changed and this sector has been added to the MSME, but there is one constraint, that these traders are allowed to take the registration, but that registration is limited for the benefit of priority sector lendings. So if you talk about the cases or interest on delay payments, so that are not available for the traders. So traders can only get the benefit of what? Priority sector lending. And even when you see the registration certificate, so there is a red line where it is written that only priority sector lending benefit are available for these traders. No any other benefit will be provided. So this we have to understand. Now coming on the very big change 43BH. So sir, what is necessity? Why this provision has been enforced? Why this provision has been added in the last budget? And we all were expecting that there is some deferment for 1 year or 2 year. But sir, when the next budget session budget will be presented, only then we can have some hope. But you cannot wait for that time because you have to sign the audit report. You have to take the decision now. If you are dealing with the listed companies, you have to publish the result within 45 days. So you cannot wait for long. And for the unlisted company, still you have some buffer time, but you have to comply with your provisions. You have to conclude your audit little early in order to prepare all your working paper diligently and make your compliance on time. So you cannot wait for long. Earlier, there was provision of MSME Samadhan trades, and we have to have file the one MSME Form 1 to the ROC, where we have declared that what outstandings are there for the MSME. But is that sufficient, or we were really followed that provision? We were really paying MSME within 45 days? No, sir. Not at all. Very few entities were there who were actually following with the provision and they were paying within the due date. But major part was non-compliant. That is why this provision was updated or amended in the latest budget. So what section 43B actually talks about? So when you say the 43B, so 43B says, I will read the wording: notwithstanding anything contained in any other provision of this act, a deduction otherwise allowable under this act in respect of whatever the expenses or payable amount is there shall be allowed on actually payment basis. So earlier 43B, as of now we have 43B where a lot of other expenses which has been, if that expense has been paid on or before the date of filing of income tax return, we can get deduction of that in the same year when it was accrued. But sir, it's around 6 months, because if you count after the March, it's April, May, June, July, August, September. So we have 6 months. Why to wait for this long period? So the amendment says any sum payable by the SSE to a micro or a small enterprises beyond the time limits specified in section 15 of Micro, Small and Medium Enterprises Development Act shall be allowed on actual payment basis. Is here one important proviso which was given to the other expenses other than MSME was removed. So the proviso was provided that nothing contained in this section shall apply in relation to any sum which is actually paid by the SSE on or before the due date, applicable in his case for furnishing the return of income under subsection 1 of section 139, that is the income tax return. But for the MSME, this 43BH, there is a wording that is called except the provision of clause H. So for clause H, you have, if you have not paid by 31st March, then you cannot get the deduction. You will get the deduction in the year of payment only, not in the year of accrual. So if there is any sum, if I have to pay to Mr. X around 1 lakh rupee, and that 1 lakh rupee was accrued in the month of January 2024. So, and the due date was, if I have no agreement, then 15 days. If I have agreement, then 45 days. So let's say I have agreement of 45 days. So after 45 days, that is 15th of Feb, 31st is there. If I talk about the 1st of January, then 14th of Feb is the due date. And if I have not paid by that date, then I cannot get the deduction in the year 23-24. So if I have made the payment in the month of April, then I will get benefit of this deduction in the year 24-25, not 23-24. So we have to see the provision, how difficult, how hard the provision is. And as auditor, we have the responsibility to check whether we are complying with this MSMED Act or not, because while issuing the audit report, we used to write that we have verified the statutory provision and the entity has complied with all the statutory provisions to the extent applicable. So if we are giving the guarantee that my client has complied with all the provisions, then we cannot ignore the provision of MSMED Act, because this is one of the very important law for the MSME. So MS section 15 of MSMED Act says that where any supplier supply any goods or render any kind of services to any buyer, and the buyer shall make payment therefore on or before the date agreed upon. So let's say I have agreed for 20 days, then 20 days. If I have not agreed anything, then 15 days. If I have agreed for 30, then 30. If I have agreed for 40, then 40. But if I have agreed for 60, then what? Please comment. If I have agreed for 60 or 90 or 120 days, will it work or not? So it will not work. If your agreement is for more than 45 days, then that is not valid at all. The maximum period is 45 days. This is also written in the section 15. It says that provided that in no case the period agreed upon between the supplier and the buyer in writing shall exceed 45 days from the day of acceptance or day of deemed acceptance. Now we have to understand how acceptance and deemed acceptance is actually relevant, because there is provision which says that if there is any defect in the supplied goods, if my supplier has supplied some of the goods, but there is some defect or quality issue and I have not taken delivery of that goods, so will that also create some liability? Do I need to pay the amount for that as well or not? Yes, you have to pay. The disallowance will be there. But if you have raised the objection in writing within 15 days, if your supplier has given you delivery and from the date of delivery within 15 days you have raised the objection in writing to supplier that this is some defect or the supply which you have made is not as per the requirement or the PO which I have shared. If supply or quality is not as expected or as agreed, in that case, that supplier will take the delivery back, and again after rectification or improved quality, they will again supply to you the correct goods or adequate kind, you can say the service or goods. Here again you will check whether my goods is as per my requirement or not. If yes, then you can accept the goods. And the 45 days will start not from the very first day when he has tried to deliver, but that 45 days will start from the acceptance by you. So for that reason, you have to understand the relevance of date of acceptance. But very importantly, you have to raise question for quality or some other issues within 15 days in writing. Okay, sir. Now moving further. Someone says, sir, why the traders are not falling here? If traders have the valid Udyam registration certificate, then they should get benefit of this delayed payment because they are also MSME. Our payment is also get delayed for the traders. Then why the benefit has not been passed on? So many arguments are there. So, sir, you have to read the definition. Definition of enterprises, which is in the section 2 clause E, you have to understand what enterprises means. So enterprises means any type of industrial undertaking. Mind the word industrial undertaking or a business concern or any other establishment, whatever name called, engaged in the manufacturing or production of goods or engaged in providing or rendering of any service or services. Sir, where traders comes in, it's only cover the manufacturer and service provider. So for this reason, you don't need to be very emotional for the traders, but you have to go with the law. If law is saying that only manufacturer and service provider is eligible, then only two persons are eligible, not any other trader will be counted here. Now moving further. If you have read carefully the 43B clause H, so we have emphasized in one word, that is micro and small. So even section 15 talks only about the micro and small enterprises. That does not include the medium enterprises. So in case I have purchased some goods from one of the entity which actually classify in the category of medium enterprises, having turnover of let's say 40 crore, 50 crore, 200 crore, you can say. So will that be also eligible for this interest on delayed payment or not? Not at all. Because only micro and small enterprises will be eligible to claim for the interest, no any other entity will be eligible. So if I have purchased something and creditors are outstanding as on 31st March 2024, whether that will be disallowed? So not at all disallowed. Because the provision is for the micro and small only, not for the medium. So if any purchases you have made from the medium enterprises, then don't worry, deduction will be allowed. You will get the deduction even if you do not pay the amount by 31st March. Likewise, if you have taken any supply from a trader and you have not paid by 15 or 45 days, then still you have to see that the deduction will be there, because for traders the provision does not apply. So two cases are there, one is trader, another is medium enterprises. So if I have any transaction with trader or medium enterprises, then don't worry for the deduction, you will get the deduction in the same year of accrual. Okay, sir? Any query? I will just wait for 1 minute. If anybody have any query, please share on the Q&A or chat box. Any query do we have? भैया 15 मिनट लेंगे. So do you have any query here? So let us not wait, because we have to cover some case studies as well. Sir, one important question is there, which some of the members has asked me. Sir, if I have creditors, opening creditors as on April 2023, will that also be disallowed? Sir, why you're talking about the disallowance? Because you have already taken the benefit of that expenditure in the last year. That is only the opening balances, and you will not get any kind of disallowance in this regard. So Joe, don't worry, sir. whatever opening balances are there, this provision is not applicable in the opening balances. One more question comes in. Sir, if I have opening balance of around, you can say 2 crore rupee, and during the year, I have made some transaction of around 3 crore. So the total balance comes around 5 crore. And out of that 5 crore during the year, I have made payment of around 2.5 crore. So what about the disallowance? Disallowance will be of only 50 lakhs or all the amount. Sir, in this case, the payment will be adjusted on the FIFO basis, meaning thereby, first the payment will be set off against the opening balances and the balance amount will be adjusted with the current year transactions. So don't be so smart. Income tax department is there to see whether you are using any loophole or trying to make fool to the department. This will not work at all. You have to be very diligent. So this exercise will not work. Please make a note of it. Now coming on the next part. Sir, there is one case, one of the expense which has been claimed on purchase from MSME supplier, and then disallowance under section 43B of the Act shall not be attracted for one reason. In case I have purchased some goods or services which has been capitalized. So if I have purchased any goods or any services with respect to any project, and both the expenses has been capitalized and creditor is standing against those capitalized expenses, so will that be disallowed? No, sir, that will not be disallowed. That is allowed because you have not charged to profit and loss account. So if you are not charging to the profit and loss account any expenditure, then disallowance will not come at all. Now we'll discuss some of the case studies with all of you. Before going into the case study, I will tell you how to work as an auditor. So when you are going for any audit, so first of all, you have to obtain a list of all the creditors. So why I'm asking this? Because you have to see how much creditors are outstanding as on 31st March, and then you have to bifurcate those creditors into two categories. One is the traders, another is others. And others will further bifurcated in two categories: the medium enterprises and micro and small enterprises. So the exercise will be done at the first time where you will bifurcate all these category, but the verification part will be done on the last one, that is micro and small enterprises. So let's say I have total around 1000 creditors list, and out of that creditor, I have filtered out that around 500 creditors are of trader, 200 are under the medium category. So I have to work only on the 300 creditors. Now on these 300 creditors, you have to see whether you have valid Udyam registration certificate or not. Number one. Number two, whether we have any written agreement with the party that payment will be made in 15 days, 20 days, 45 days or not. Because if written agreement is not there, then the due date will be 15 days. The period is 15 days, and if written agreement, then as per the written agreement up to 45 days. So based on that, I will bifurcate further and write it in one of the column. I will keep adding the columns for this. Now, if I have identified that, yes, I have the agreement, okay, then do we have the valid certificate? Yes. If we have the valid certificate, then on the sample basis, I have to check that certificate validity from the Udyam portal. Because now in the Udyam portal, we have the facility which has been provided. Putting that number, you can check whether the certificate given to you is correct or not. If correct certificate is there, then you can move further. How much aging is there for this micro or small, and what was the due date and what is actual date of payment. If my due date was in the month of January, let's say 15th of January was the due date, and I have made payment on 31st March 24. So will this expense be disallowed? No. Why not? Because there is no outstanding. I have made the payment as on 31st March. But for this default period, I have to pay the interest. For that reason, you have to again categorize the aging of creditors based on the list and the working which you have done. Now you will see how many creditors are there whose payment is beyond the specified date, that is 15 or 45. For that creditors whose payment, whose outstanding is beyond 45 or 15 days, you have to calculate the interest. Sir, what exactly the interest is? How much interest I have to pay? Do you have any idea? Sir, 3 times interest you have to pay. If the RBI rate is 6% or 7%, then 21% rate will be charged for the default period after the due date to the date of payment. And yes, if you have the corporate entity, then you have to make the disclosure in Schedule 3 as well. In the Schedule 3, you will present that these are the creditor for MSME and these are the others. And for the MSME, this was the opening, during their added, during their paid, and these are the closing. Likewise, for the interest, this much interest was payable at the opening date. During the year, this much interest was payable. During the year, this much interest has been paid to the parties, and this is the closing balance. And for that sake, you have to also file the MSME 1 form to the ROC, where you will report all these details. Again, when you will be filing the tax audit report, you have to give the disclosure of this disallowance as well. One example I will share with you. As I said, I will touch one case study. So let's say as on 1st of Feb 2024, I have raised one invoice and the credit period was 30 days. That was the agreed period. So my due date of payment would be whole Feb is okay. 30 days will be on the 2nd of March 2024. So the due date is 2nd of March. And if my payment has been made on the 2nd of March, then disallowance will not be there and you will get the benefit of expenses in the same year of accrual. But let's say the credit period was 60 days. I have raised invoice on 1st of Feb and credit period was 60 days. Is it okay? Not at all. So you have to count 45 days. And for that 45 days, when it will come, 45 days, 17th of March. And if I have made the payment in the month of April, then yes, expense will be disallowed in the year of accrual, but it will be allowed in the year of payment. So this is something which you have to keep it in mind. Why so? Because once the expense will be disallowed, this will add it back to your income. Let us say if I have the total income of around 30 lakh rupee, net profit is 30 lakh, which I have declared. And out of that, I have around 1.7 crore of creditor which are overdue for payment as on 31st March, and I have not made the payment. So my reporting profit would be 1.7 plus 30 means 2 crore profit. And for that 2 crore profit, I have to pay the taxes. This will again, if you are the corporate client, then it will also impact the deferred tax payment liability, deferred tax calculation for the timing difference, because now this expense has been disallowed, but in the next year it will be allowed. So for working purpose, your understanding purpose, you have to be very diligent while dealing with this MSME client, because this is the very crucial time where you have to give your 200%. Because if you are using any casual approach, then a lot of other bodies are waiting for you. Even disciplinary committee is very active in these days. They will check whether you have performed your duty diligently or not. If you're not performing your duty very diligently, then you can think what the situation would be. So this was it from my side. If you have any kind of questions, so for next 2 to 5 minutes, I can take up the question. Vatsalji,
Yes, sir.
do you have any question from the participants?
Mm, Actually, sir, all the questions have been answered by you already,
Okay.
as far as I can see.
Okay, so thank you so much for giving me the opportunity to interact with the members. And in the future as well, if there is any kind of query comes during the session or otherwise, so you can mail me. So I will try to revert at the earliest. So thank you so much, Vatsalji. Thank you so much, Ajay Tiwari ji and entire team of CP committee for giving me the opportunity once again. Thank you so much.
Thank you, sir, for the wonderful session. It was indeed a pleasure to gain insights from you about the burning issues in MSME legalities, which will surely help us professionally. Now, to continue with our program, I now invite second speaker of the day, CA Chunauti S. Dholakia ma'am, who shall be imparting her deliberation on the issues in trust registration under the Income Tax Act. To introduce, CA Chunauti S. Dholakia ma'am is a well-known faculty in seminars organized by Bhuj branch and Gandhidham branch of WIRC of ICAI. She has also written multiple articles on income tax, GST, etc. for various newsletters, journals, and newspapers. Moreover, she has also authored book on all about trust and NGOs. I now request ma'am to please start her deliberation on the topic and enrich the members in the audience with her views.
Thank you, Vatsalji. Whether my screen is visible?
Yes, ma'am.
Hello. Whether my screen is visible?
No, ma'am.
Um, now it is
Now,
visible?
yeah, yes, ma'am. Yes, ma'am.
Okay. Thank you, Vatsalji, for the introduction, and thank you, Purushottam Khandelwal sir, for giving me this opportunity. Today, my discussing topic is issues in trust registration under the Income Tax Act. We are facing many difficulties and many issues in trust registration due to such changes made in trust registration process by Finance Act 2020. But there is one very meaningful quote that nothing changes if nothing changes. To change something, there is always needs to change some other things. Changes in registration process of trust has been made to streamline the process of trust registration. And in recent past, some trusts were facing many difficulties in producing registration certificate to the department, as the whole process of the registration process was offline. And it is obvious that for all trusts, the registration certificate may not be available with them. Hence, the trust was facing many difficulty, and therefore it was thought to make the whole process online, and it was thought to issue the registration certificate based on some criteria. Hence, the whole process made changed by Finance Act 2020. Now, to understand this, first we will see overview of the basic provisions applicable to trust registration. Then we will see issues faced during the trust registration and possible solutions in light of recent judgments. And then we will see important matters to be considered to avoid rejection or cancellation of registration. Now, to start with the basics, we all know that Section 11, 12, and 13 of the Income Tax Act are complete code, and they are related to taxation of trusts. And registration under Section 12 is mandatory to claim exemption under Section 11 and 12 of the Act. New provisions for registration has been inserted by Finance Act 2020, and there is drastic change made in registration process. And as we all know, now there is no permanent registration. First, we will have to apply for provisional registration, which is issued for 3 years. Then we will have to apply again for regular registration, which is issued for 5 years. And with effect from 1st October 2023, we can apply for regular registration subject to satisfaction of some conditions. We will see such conditions later. Now, who can apply for registration? Section 12 has specified any act or institutions. Means any public, charitable or religious trust can apply for Section 12 registration. Private trust can obtain registration under Section 12. No, private trust cannot obtain registration under Section 12. Whether cooperative society and Section 8 company can obtain registration under 12. Yes, they can obtain registration under Section 12 because they are covered under institutions. Religious trust can obtain registration under Section 80G. No, religious trust cannot obtain registration under Section 80G because there is condition related to Section 80G that to obtain registration under Section 80G, objects of the trust should not be related to particular religious community. Hence, we should always consider that if the trust has both the objects like charitable and religious, and the trust is conducting activity in case of religious nature, and if the objects of religious nature is more than 5% of total income, the charitable trust can also not apply for 80G registration. Now, which conditions should be followed to obtain registration? Section 12 specifies two conditions. First is charitable object and second is genuineness of activity. Now, what are the charitable objects? Section 215 defines charitable objects as under. First is relief of poor, then education, yoga, medical relief, preservation of environment, preservation of monuments or places or objects of artistic or historic interest, advancement of any other object of general public utility. Now, if the trust has object of advancement of any other object of general public utility, the trust has to satisfy conditions mentioned in proviso to Section 215 of the Act. Now, which are the conditions mentioned in Section 215 proviso? The Section 215 proviso mentions two conditions. First is if the activity of the trust is in the nature of trade, commerce, or business, the trust has to conduct such activity in the course of carrying out of any other object of general public utility, and the second is receipt from such activity should not be more than 20% of total receipt. Now, what are the trade, commerce, or business? We will see this in later. And as we all know that recent Supreme Court judgment in case of Ahmedabad Urban Development Authority has removed the concept of predominant object. Hence, even if the trust as main object is charitable, but the trust is conducting any activity in the nature of trade, commerce, or business, such condition has to be followed. And the second is object of the trust should be genuine and activity should be genuine. Now, at the time of introduction of this new provision, Section Rule 17 has been amended, and the trust were divided under two categories. First is the trust which were already registered under old provision, and second are the trust which were not registered under old provision. Now, the trust which were not registered under old provision, there were two types of trust. First type of a trust which were already commenced activity before applying for provisional registration, and second type of the trust which has commenced activity after obtaining provisional registration. Now, most of the issues coming up out of the second last category. We will see this issue in detail. Now, as we all know that Section 12A1 AC has been amended, and to specify due date of application for registration, the trust has been divided under 6 categories. First category are the trusts which are old trust or institution which are already registered under Section 12A under old provisions before implementation of new provision. Such trusts were required to apply within 3 months after implementation of new provision. Due to COVID-19, such due date has been amended, and in recent circular of circular number 724, the due date has been extended to 30th June 24, meaning thereby all old trusts which are registered under old provision but not applied for registration under new provision has to apply before 30th June 2024. Second category are the trust or institution which has obtained regular registration under new provision and wants to re-register, meaning thereby the trust which has obtained regular registration under new provision, and at the time of expiry of such registration, the trust will have to apply again and obtain regular registration again at least 6 months prior to the date of expiry of such registration. Third category of trust, which are very much important, such category are trust or institution which has obtained provisional registration under new provision and wants to obtain regular registration. Such trust has to apply at least 6 months prior to expiry of period of provisional registration or within 6 months of commencement of its activity, whichever is earlier. For example, if the trust has commenced activity on 1st April 2023 and obtained provisional registration for assessment at 24-25 to 26-27, now the trust wants to apply for regular registration. What will be the due date? The due date will be at least 6 months prior to the expiry of period of provisional registration, that is on or before 30th September 2025 or within 6 months from the date of commencement of its activity, means 30th September 2023, whichever is earlier, meaning thereby the trust which has commenced activity on 1st April 2023 has to apply on or before 30th September 2023. Last category are the trust or institution whose registration become inoperative and wants to obtain provisional registration. The trust has to apply at least 6 months prior to the commencement of the assessment year from which the said registration is sought to be made operative. Last category, fifth category are the trust or institution which has adopted modification of object which do not conform to the conditions of registration. Such trust has to apply within a period of 30 days from the date of said adoption or modification. Means if the trust has changed its object and which are not similar to object which is mentioned in the registration certificate which was obtained earlier, the trust has to apply again for registration and within a period of 30 days the trust has to apply. Now, as we all know and we have seen earlier that with effect from 1st October 2023, the trust can directly apply for regular registration. The conditions are as under: if the trust or institution which has not commenced activity and wants to apply directly for regular registration, the trust has to apply at least 1 month prior to the commencement of the previous year relevant to the assessment from which the said registration is sought. If the trust or institution which has already commenced activity and wants to apply directly for regular registration, the trust has to apply at any time after the commencement of activities, provided benefit of exemption under subsection 4, 5, 6 or 6A of section 1023C, section 11 or section 12 has not claimed in any previous year ending on or before the date of such application. Meaning thereby the trust which has already commenced activity can now directly apply for regular registration, but subject to the condition that the trust has not obtained benefit of section 11 or 12 in any earlier previous year. Now, similar conditions are there for section 80G registration, and there are conditions for direct regular approval has been there in 80G also. So the trust or institution which has not commenced activity and wants to apply directly for regular approval has to apply at least 1 month prior to the commencement of the previous year relevant to the assessment from which the said approval is sought. And the trust or institution which has already commenced activity and wants to apply directly for regular registration, the trust can apply at any time after the commencement of such activity, provided benefit of exemption under subsection 4, 5, 6 or 6A of section 1023C, section 11 or section 12 has not claimed in any previous year ending on or before the date of such application. Means the condition which was there in section 12 are also in section 80G. For example, if the trust has obtained regular registration under section 12 in assessment at 24-25, and after the some years, suppose after 2 years the trust wants to obtain registration under section 80G, the trust can apply directly for regular registration under section 80G only if the trust has not obtained benefit under section 11 or 12 in the assessment at 24-25 to 26-27. Now, Circular number 724, which is recently issued, has extended the due date to 30th June 2024. The due date has been extended in following cases. First is all the existing trust or institution which were already registered under all provisions under Section 12A, 80G or Section 1023C but not applied for registration under new provision and not filed Form 10A, meaning thereby all the existing trusts which were registered under old provision but not registered under new provision has to apply on or before 30th June 24. If such trust will apply after 30th June 2024, application will be rejected. The trust which has applied for provisional registration under new provision after commencement of activity but not applied for regular registration or approval under Section 12A, 80G or Section 1023C within 6 months from the date of commencement of activities and not filed Form 10AB, meaning thereby all the provisional registration which has been obtained after commencement of activity has to apply within 6 months from the date of commencement of activity for the regular registration. If the trust will not apply within 6 months from the date of commencement of activity, application for registration will be rejected, but the sub-trust can apply up to 30th June 2024. The existing trusts which have failed to file application and subsequently applied for provisional registration as a new trust for assessment year 22-23 and has received Form 10AC. Now, this circular is applicable to all applications for registration or approval for the trust or institution mentioned above, which are already filed but pending for the order for grant of registration or approval, meaning thereby all the applications which are filed before issuance of this circular and is pending for approval after issuance of this circular will be granted if such application will fall under this criteria. Also, if the order rejecting the application for registration or approval has been passed earlier solely on the ground that the application was furnished after the due date or the application was furnished under the wrong code, the registration application can be filed again on or before 30th June 2024. But whether application for registration can be filed again for assessment prior to the assessment for which application for registration was rejected? No. Application for regular registration can be filed only for that assessment year for which it was rejected. For example, if application for registration was rejected for assessment year 24-25 due to it was filed beyond the due date, then it can be filed again only for assessment year 24-25 and not for assessment year 23-24 or any earlier assessment year. Now, coming to the issues. First and foremost important issue which are facing many members are facing and many trusts are facing is the date of commencement of activity. Section 12A1 AC3 and Section 80G53 mandates to file application for regular registration within 6 months from the date of commencement of activity or at least 6 months prior to the expiry of period of provisional registration, whichever is earlier. We have seen this condition earlier. Now, what is the date of commencement of activity? The Act has not defined anywhere the definition of the date of commencement of activity, whether it is date of incorporation of trust, whether it is the date when the trust has first time received donation, or whether the date when the trust started applying its income for the trust object. If even the department has not clarified what will be the date of commencement of activity, but many experts are of view the date when the trust started applying its income for the trust object will be considered as date of commencement of activity, and this view seems proper also, but more clarification is needed from department. Now, coming to the issues related to date of commencement of activity. Some existing trusts are facing also difficulties. They are incorporated many years before implementation of new provision and unregistered up to implementation of new provisions and wants to register under Section 12A. It is impossible for such trusts to obtain registration under Section 12A because they are formed many years before implementation of a new provision. How can the trust can apply within 6 months from the date of commencement of activity? Suppose the trust is formed in 2001 and it was unregistered till financial year 2024-25 and wants to obtain registration under Section 12A. How can such trust will apply within 6 months from the date of commencement of activity, as it has started commence activity in year 2001 only, and that time that these provisions were not applicable? How can it be possible? And the direct regular registration can be obtained, as we seen earlier, in from 1st October 2023, but the condition specified in that application for registration can be filed directly only if the benefit of exemption under section 11 and 12 cannot be claimed. But if the trust has started activity and not obtained section 11 and 12 benefit, and even if the trust obtained registration under section 12A, but after some years, suppose after 2 years, the trust wants to obtain registration under section 80G, it will be impossible for the trust to obtain registration under section 80G, as the trust had obtained final registration or regular registration in financial year 2024-25. The trust started claimed exemption under section 11 and 12, and the trust will never claim for registration under section 80G. It can claim 80G registration, file application for registration only when it has not obtained benefit of exemption under section 11 or 12. The issues are facing by many trusts, and some relevant judgments gives relief in some issues and clarifies some doubts. The recent judgments issued by many tribunals and high courts held that there should not be any discrimination between existing and new trust for provisional registration. The term whichever is earlier should be applicable only to the trust which has commenced activity only after obtaining provisional registration, and not to the trust which has already commenced activity before obtaining provisional registration. And for the existing trust, only condition applicable should be to apply within 6 months of expiry of provisional registration. This is harmonious interpretation. Hence, the trust which has commenced activity before obtaining provisional registration can obtain regular registration within 6 months from expiry of the provisional registration. This should be condition. The rulings are directs this. And the one recent judgment in case of NJ Charitable Foundation Surat versus CIT exemption, this judgment held that donation to other trust is not the activity in real sense. Activities are to be considered as commenced when the donation received is utilized for the charitable activities. Hence, if the trust has started giving donation to other trust, such date of giving donation to other trust should not be considered as date of commencement of activity, as it is not the activity in real sense. The judgments supporting this view are as under: Shri Narsimha Priya Charitable Trust versus CBDT, Bhamasha Sundarlal Daga Charitable Trust versus CIT exemption, Vananchal Kevani Trust versus CIT exemption, Rabdi Vibhag Progressive Kevani Mandal versus CIT exemption, TB Lulla Charitable Foundation Sangli versus CIT exemption, and CIT 1982 Charitable Trust Coimbatore versus ITO exemption. Now, another issue is delay in filing application due to bona fide reasons. The trust are filing difficulties in filing registration application before due date, as the circumstances are beyond control of the trust, and the trust is unable to file application for registration before due date due to bona fide reasons. Such bona fide reasons may be trustees were out of country, health problems to trustees, or mistake of the accountant by treating provisional registration as regular registration. In case of Best Buds Pest Care versus CIT exemption, the trust has filed affidavit, and in the affidavit is what stated that the old accountant has resigned and the new accountant was unaware about the difference between provisional and regular registration, and they have come to know the mistake only when their CA pointed out the mistake. Hence, they applied for registration at that time and prayed for condonation of delay. But CIT exemption has rejected the application, as the application for registration was filed beyond the due date. And ITAT Ahmedabad held that application for registration under Section 80G cannot be rejected on the ground of delay in filing Form 10AB due to bona fide reasons and circumstances beyond control of the trust. Now, another issue is related to notice. CIT issues notice seeking some details before passing order for regular registration under Section 12B or approval under Section 80G of the Income Tax Act. Such notices are uploaded on the portal only sometimes, and it is not sent physically or through email. We are facing this issue sometimes, and we have seen that notices are uploaded on the portal only, and the trust has not received the notice in email or even in hard copy, and notice mailed on the email ID other than registered email ID. Sometimes the notice is issued on the wrong email ID. In such cases, the trust is unable to reply for the notice, and the application for registration is rejected if no response or only part response is filed. Hence, we should always keep in mind that when we receive notice, we should first see what are the details expected from the department and what details we are sending. We should give response for each and every details which is demanded in the notice. If we will not give response to each and every details, the application for application will be rejected due to lack of genuineness of activity. Recent judicial rulings related to notice are as under: State Becher Das, Mangal Das, Jain Svetambar Trust versus CIT exemption. In this judgment, the notice was mailed on wrong email ID. That is, the notice was sent on the mail ID which was not registered with the department, and CIT exemption rejected the application on the ground that no response has been received from the trust. Hence, there is lack of genuineness of activity. ITAT Pune held that notice mailed on wrong email ID is not an effective notice and violates the principle of natural justice. Opportunity should be given to the trust by serving the notice on the registered email ID. Another interesting judgment is Sant Kabir Mahasabha versus CIT exemption. In this case, the notice was uploaded on the portal only, and it was not sent in hard copy or even on email. And CIT exemption rejected the application for registration due to no response received from the SSE. And ITAT Chandigarh held that merely uploading information about date of hearing on the income tax portal is not the effective service of notice as per provisions of Section 282 of the Act. CIT shall serve the notice physically as well as on the registered email ID and decide afresh for application for registration. Now, another issue is absence of dissolution clause in the trust deed. At the time of execution of trust deed, we should always keep in mind that there must be dissolution clause in the trust deed, and in the dissolution clause, we must mention manner of dissolution of trust and manner of transferring assets of the trust at the time of dissolution. Some trusts which are old may not have the dissolution clause, and because they have incorporated many years ago, hence that time it may be possible that the dissolution clause was not mentioned, but such trusts are facing rejection of application due to absence of dissolution clause. Now, in case of Roof VK Jain Foundation versus CIT exemption, the application for registration was rejected due to absence of dissolution clause, and the CIT exemption held that absence of resolution clause is lack of genuineness of activity. ITAT Delhi held that absence of dissolution clause cannot be considered as absence of charitable objects and lack of genuineness of activity. Absence of dissolution clause in trust deed cannot be sole basis for rejection of application. Another issue is objects for particular religious community. Some trust has included the words related to particular religious community or caste in the name of trust. Some trusts are facing difficulty due to these words included in the name of the trust. Even if majority of the trust are working only for the benefit of general public and not for the particular benefit in community or caste, but they are facing rejection because Section 12A specified that registration under Section 12A shall be cancelled if the trust has applied for its income for the benefit of particular religious community or caste. In case of Sindhu Seva Samiti versus CIT exemption, Ahmedabad, the trust has included the word Sindhu in the name of trust. CIT exemption rejected the application on the ground that the Hindu words defines the community, hence the trust is working for particular religious community, hence exemption cannot, registration cannot be granted. But ITIT Ahmedabad held that actual activity should be verified for registration and not any word in name of trust indicating any particular religious community. And only due to inclusion of the word related to any particular community in the name of trust, it cannot be confined that the trust is formed for the benefit of particular religious community. Another judgment related to religious community is Jamiatul Banat Tankaria Bharuch versus CIT exemption. In this case, the trust was running a school for the benefit of general public, but CIT rejected the application on the ground that the trust is working for the benefit of particular religious community and applied section 13(1)(b). But ITIT Ahmedabad held that trust which is established for the benefit of particular religious community but its objects are otherwise charitable is a valid trust for the purpose of grant of registration. Also, provisions of section 13(1)(b) of the Act are applicable only at the time of determination of eligibility of exemption under section 11 and not at the time of grant of registration. Another very interesting judgments. This is regarding Sri Shruti Parampara Gurukulam Bengaluru versus ITO. In this case, the trust was providing Vedic education to general public. CIT exemption granted the registration under section 12(b) under religious trust and not charitable trust category and rejected the application under section 80G on the ground that the trust is spreading knowledge of Vedas and the knowledge of spreading Veda is religious object and therefore it is formed for the benefit of particular religious community. Now, ITIT Bengaluru held that Hindu is a way of life or state of mind and not a religion. The word Veda means knowledge and it is derived from the word Vid, means to know. Vedas contains knowledge of science, medicine, political science, psychology, agriculture, poetry, art, music, etc. Hence, it cannot be confined that Vedas are belonging to a particular religion. The activity of spreading Vedic education is charitable and not religious. Hence, registration under section 12(b) and ETG shall be granted under charitable trust category and not religious trust. Now, what if the application for registration has been rejected? There is very harsh provision inserted by Finance Act 2023 with effect from 1st April 2023, Section 115TD amended. We should always keep in mind at the time of filing application for registration, if the application is rejected, there is very, very harsh provision and the trust will have to pay this tax. This tax is called a tax on accreted income or exit tax. Now, what is the provision? Section 115TD provides that the trust shall be deemed to be converted into any other form of registration if application for registration under Section 12(b) is rejected or cancelled, or application for registration has not filed within specified time, or if the trust has modified object but not applied for registration within 1 month, or if the trust is merged with the different object entity, or if the trust is dissolved but failed to transfer all the assets within 12 months. If this is the case, the trust has to pay tax at maximum marginal rate on accreted income. Now, what is the accreted income? Accreted income means fair market value of assets less liabilities as on date of order, cancelling or rejecting registration, or date of modification of objects, or as on last date of filing application for registration under Section 12(b) of the Act. This tax on accreted income shall be paid within 14 days from such date. Such date means the date of rejection of application or date of modification or of object, or if the trust has merged with the different object entity, such and the date when the trust merged with different object entity, or if the trust is dissolved, the date when the trust was dissolved. From this date, the trust has to pay tax on accreted income. Hence, if the application for registration under Section 12(b) has been rejected, or if the trust has not applied for registration within due date, specified under the Act, the trust is required to pay tax on accreted incomes under Section 115TD of the Act. Now, at last, we will see important matters to be considered to avoid rejection or cancellation of registration. First are the matter related to trust deed. The trust deed is the main document of execution of trust, and we should always form the trust deed very carefully, and the name of the trust should be consistent with the object of trust. At the time of deciding the name of the trust, we must see that the name of the trust should be consistent with the object of trust, and the object of trust should not be related to particular religious community or caste. And in the trust deed, we should mention in the object clause that trust will work for the benefit of general public without discrimination of any caste, creed, race, or religion. Means the trust will work for general public. The trust should be irrevocable. In the we will see Form 10A and 10AB, there is clause that whether the trust is irrevocable, hence we must mention in the trust deed that the trust is irrevocable. And in the dissolution clause, in manner of dissolution trust deed should be included, as we have seen this earlier. Also, it should be mentioned in powers and duties of trustees. We are mentioning powers and duties of trustees clause in the trust deed. And at the time of forming this clause, we must see that we must mention that nothing contained in this deed shall be deemed to authorize the trustees to do any act which may in any way be construed as violating or contrary to the provisions of Section 215, 1023B, 1023C, 11, 12, 12A, 12AB, 13, and or 80G, 40AIA, 40A3, 43B of the Act 1961, and or any other statutory modification thereof or any other section applicable to trust in future. This is because the trustees are compliant to follow these provisions. Hence, it should be mentioned in the trust deed itself. Now we will see other important matters. If the trust has income from profits and gains from business or profession, such business should be incidental to attainment of objects of the trust, and separate books of accounts should be maintained. As we know that Section 11(4)(a) specified this clause. Also, for the advancement of any other object of general public utility, objects should not be related conducting any activity in the nature of trade, commerce, or business. If the institution is carrying out any other object of general public utility, such activity should be undertaken in the course of actual carrying out of such advancement of any other object of general public utility, and receipt from such activity should not be more than 20% of total receipt. As we have seen earlier, that Supreme Court judgment in case of ACIT versus Ahmedabad Urban Development Authority, which is issued in year 2022, support this view. If the trust is conducting medical or education institution, the profit from this activity should not be more than cost plus markup. Markup means the total profit which is needed to carry on activities of the trust. If the cost plus marginal markup is not the profit and the trust is earning profit more than marginal markup, the trust will not be considered as charitable trust and the application for registration will be rejected. Hence, we should keep in mind this always. Also, provisions of other laws should always be followed and it should not be violated. Now, what is the trade, commerce, or business? Section 215 defines what is the trade, commerce, or business. Now, to find out what is the trade or commerce or business, two questions are important. First is whether activity conducted for a fee, cess, or consideration. If yes, then whether such activity is conducted at cost or marginal markup. If the answer is yes for first question and no for second question, the activity is treated as trade, commerce, or business. And if the activity is treated as trade, commerce, or business, conditions mentioned in proviso to Section 215 shall be followed. Such condition, as we have seen earlier, is that such activity should be in the nature of conducting activity of general public utility, and total receipt from such activity should not be more than 20% of total receipt of the trust for that assessment year. Now, for example, if the trust is conducting paid workshop or training classes or skill development courses, whether such activity will be considered as trade, commerce, or business. If such activity, we should see these two questions. If the activity is conducted at cost plus marginal markup, such activity will not be considered as the trade, commerce, or business. But if profit from this activity is more than cost plus marginal markup, it will be considered as trade, commerce, or business. Also, if the trust has given on rent shop and offices, whether such activity will be considered as trade, commerce, or business. We should always see that if the trust has given shop or offices or any other property on rent and income from such activity is more than cost or marginal markup, such activity will be considered as trade, commerce, or business. We must have kept books of accounts separately for this activity, and income from such activity should not be more than 20% of total receipt. Otherwise, the trust will lose charitable activity. Now, what is in the course of actual carrying out of any other object of general public utility? What is the meaning of in the course of, which is mentioned in proviso to section 215? In the course of means connected to or part of. Hence, such activity should be connected to the actual carrying out of any other object, or it should be part of the object of general public utility. Means it must be essential to conduct such business activity. Now, to avoid cancellation of registration, we should consider some points. It should not be specified violation. Section 12 will be mentioned some specified violation which are as under the income applied other than the object of trust. If the income is applied other than objects of trust, it will be considered a specified violation. If the income from profits and gains from business or profession which is not incidental to attainment of trust objects, or separate books of accounts are not maintained for the business incidental to trust objects, it should be considered as specified violation and the application for registration will be cancelled. Also, if the trust has applied income for private religious purposes, it will be considered a specified violation. If the trust has applied its income for the benefit of particular religious community or caste, or if any activity of the trust is not genuine or is not carried out in accordance with all or any of the conditions subject to which it was registered, it will be considered a specified violation. Also, if the trust has not complied with requirement of any other law, if any other law, suppose any state public trust act is applicable and the trust is not following any provision of this trust act, it will be considered as specified violation and the application for registration will be cancelled. If the application for registration is made under section 12A or 12AB, but it is not complete or it contains false or incorrect information, then also it will be considered a specified violation. Hence, at the time of filing application for registration, we must be careful in filling the form. If it is not complete, or if the documents required to be attached is not attached, or the false information or incorrect information is given, application for registration will be cancelled. So if any question, can ask. Otherwise, thank you. Thank you all for giving me this opportunity, and thank you for patience hearing. Thank you. Hello. Hello, Vatsalji.
Yes, ma'am.
Ji, if any question, then I will give live. Otherwise, I can conclude.
Yes, ma'am. There are certain questions as far as I can see.
Yes. Yes.
First question is, can an NGO be converted into a public charitable trust?
NGO can be converted. If
Yes.
NGO is association or if it is registered under trust, then it could be converted into public charitable trust. Otherwise, not.
Okay. And another question is, ma'am, those trusts which have not yet obtained any registration under Section 12A,
Huh.
which is a 20-year-old trust, now want to apply
Yes.
for 12A registration. What are the conditions for this situation?
They can apply on or before 30th June 24. If they will apply after 30th June, application will be rejected because last date to apply for such old trust is 30th June 2024. And condition should be the documents required should be attached and no other conditions.
Okay. And ma'am, another question is that provisional registration was granted from assessment year 24-25 to assessment year 26-27.
Yes.
So by what date renewal application should be filed? That is 6 months to be calculated as per the financial year or assessment year 30th September 25 or 30th September 26.
If within 6 months from the date of commencement of activity, if the trust has already commenced activity, it should be filed after obtaining provisional registration. And if the trust has not commenced activity, 6 months from the completion of date of regular registration, provisional registration, 6 months from the expiry of provisional registration.
Okay. A related question is that can you please explain with the example for due date for 6 months from the expiry in terms of assessment year financial year? It is another question but related to this only. With example he is asking.
Yes, if the trust has obtained provisional registration for assessment at 24-25 to assessment at 26-27, the trust can shall apply. Assessment at 26-27 means financial year 25-26. Hence, the trust has to apply on or before 30th September 2025. Hence, if the trust has commenced activity, the trust can apply immediately after obtaining provisional registration. Otherwise, this due date will be applicable.
And my question is, can educational society opt for section 1023C IIAD
Yes.
and not
Yes.
applying for renewal under section 12A AC? Whether they will have to pay tax under 115 TD? It is the question.
They have renewed registration under section 1023C.
Yes.
Okay, then they cannot shift to 12A because there cannot be simultaneous registration under section 1023C and 12A. They will have to apply under section 1023C only. And if they will not apply for in 2023, 130D will be applicable.
Okay. And are gratuity trust required to be registered afresh?
With trust?
Gratuity.
Gratuity trust, yes, they will require to file application afresh.
Okay. Is provisional registration under section 12A considered as permanent registration?
No, provisional registration is temporary registration, which is issued for 3 assessment year. We have to apply again for regular registration. Regular registration is also given for 5 years. It is also not permanent registration. Now, concept of permanent registration has been removed. Hence, the provisional registration, after obtaining provisional registration, the trust has to apply for regular registration. The due date is already we have mentioned within 6 months from the commencement of date of activity or at least 6 months prior to the expiry of provisional registration.
Another question is, if a trust is running boarding and lodging facility for pilgrimage in the religious place, will the rent and service fees received will be under trade or commerce activity?
If the trust has received rent, which is more than cost plus marginal markup, it will be treated as a trade, commerce, or business, and the condition of 20% of total receipt has to be followed.
Okay, ma'am.
Okay.
Ma'am, I think these are all the questions.
Okay.
So I think we can conclude now. So I would like to thank you, ma'am. It was surely a boon to listen to your views on the topic, and I am certain that all members in the audience also feel the same about the deliberation. We sincerely wish to thank you for the wonderful words of wisdom for the day. And to conclude, it has been a wonderful to listen to both the eminent speakers in their area of specialization, and their insights on the subject will surely prove to be useful for all of us in the audience. And we look forward to listen to you both again sometime soon. And with this remark, we conclude this webinar for the evening. Thank you, ma'am.
Thank you. Thank you so much.
Jigar, you can close this session. Jigar, you can close this.